ICICI Bank management.
For the bank for the quarter and the year ended 31st March 2015. First of all, I'm very happy to say that for the first time, the bank's standalone profit has crossed the benchmark of 10,000 crores. So the profit after tax for ICICI Bank for the full year was 11,175 crores, which represents a 14% growth on a year-on-year basis. The profit after tax for the quarter ended March 2015 was 2,922 crores. We had a good growth in our loan book. Our domestic loan portfolio growth was 18% year-on-year for 31st March 2015. And this was driven mainly by the retail growth, which was 25% year-on-year growth. But we also saw the growth improving on the corporate side, and the growth on the corporate portfolio was 10% annualized for the quarter of 31st March 2015. The loan growth was supported by continued growth in the deposit base. Our CASA deposits grew 15% on a year-on-year basis. We added 15,727 crores to our savings account deposits, 6,275 crores to our current account deposits. And as a result of this, our CASA ratio improved to 45.5% on 31st March 2015 compared to 42.9% on March 2014. Reflecting the strong funding base and franchise, we saw a healthy increase in the net interest income. Our NII increased 16% for the year, and our net interest margin improved by 15 basis points to 3.48% for the year FY 2015. In fact, the net interest margin was 3.57% for the fourth quarter of FY 2015. Our non-interest income also grew handsomely by about 17%. Within that, the fee income grew 7%. While the retail fee income grew at a healthy rate, we had a lower growth overall on the corporate side of the fee income. The bank made healthy treasury gains of about 1,693 crores for the whole year, and the other income was 2,196, which included dividend from subsidiaries and repatriation of profit from the branches. We also continued to maintain our focus on operating efficiencies, and our cost-to-income ratio, which has always been very healthy, that improved further to 36.8% for FY 2015. Coming to asset quality and provisions, given the challenging operating environment, the banking sector has continued to see additions to NPAs and also, the slippages from restructured portfolio to NPAs. Given this background, the bank's net NPA ratio was 1.4% on 31st March 2015 compared to 1.12% on December 2014. The outstanding net restructured portfolio actually reduced from 11,017 crores at March 2015 compared to 12,052 crores on December 2014. So overall, while there was an increase in the net NPA, there was actually a reduction in net restructured loans because partly there is some movement from restructured loans to the NPA book. So as you would see, net-net we had a very healthy operating performance because this was backed by a very healthy increase in the net interest margins and a continued focus on operating efficiencies. And this improvement in operating performance gave us the ability to absorb the higher provisions which were arising on account of challenging environment. And in spite of this environment, we have actually been able to improve our return on assets, which has improved to 1.86% for FY 2015 compared to 1.76% for FY 2014. The performance of our domestic non-banking subsidiaries also continued to remain healthy. The life insurance subsidiary made a profit after tax of 1,634 crores. The general insurance company made a profit of 536 crores. Both the insurance companies maintained their market leadership amongst the private players. Our asset management subsidiary achieved a 35% increase in profit after tax to 247 crores. The profit of ICICI Securities increased to 294 crores. The consolidated profit after tax therefore increased 11% to 12,247 crores, giving us a consolidated return on equity of 15% for FY 2015. The bank continues to maintain its focus on customer franchise and expanding our distribution network. During the fourth quarter itself, we added about 200 branches and 360 ATMs to our network. We have also always been pioneer in use of technology. We focused on leveraging the current transformational trends in technology, which is mobility, digitization, and rapid growth in use of social media. We've had a number of technology initiatives that we introduced during the year, and some of them are that we set up 101 fully automated 24/7 touch banking branches. We launched the tab banking services for seamless and convenient account opening. We launched a refreshed and intuitive internet banking website. We have a very rich mobile banking application for undertaking a full range of activities. We have launched the contactless tap and pay card payments. During the quarter, we launched the digital mobile wallet called the Pockets, which is positioned as India's first digital bank, which allows any individual, whether a customer of ICICI Bank or not, to download and initially activate an e-wallet. And this e-wallet is amongst the most comprehensive wallets that can be used to pay on all websites and all mobile apps. We have also during the quarter launched video banking services for our NRI customers, through which any NRI can do a video call with any of our customer care representatives, round the clock on all days from anywhere in the world. And we are very soon launching an application on the Apple Watch, again leveraging the emerging trend in wearable technology. So we'll continue to keep launching new digital banking propositions in the day ahead. Finally, talking of our capital adequacy ratio, as per the RBI guidelines on Basel III norms, our total capital adequacy ratio was 17.02%. The Tier 1 capital adequacy ratio was 12.78%, both well above the regulatory requirements. And based on the performance for the year, the Board of Directors has recommended a dividend of 5 rupees per equity share of a face value of 2 rupees, compared to 4.6 rupees per equity share for FY14. Thank you.
Ma'am, this is Gopika from ET Now. My first question is, could you tell us what were your fresh slippages this quarter? How much of that came from restructured book? Also, what were the fresh restructuring that you did this quarter?
So this quarter we did a restructuring of 1,247 crores. Actually, this was even lower than what we had thought at the beginning of the quarter. As far as additions to NPA, we had an addition of 3,260 crores. But out of that, 2,246 crores was just on account of slippage from restructured to NPA. So the net addition to the new NPAs was just about 1,000 crores.
Okay. Last quarter, you had said that there is a restructuring pipeline of around 2,300 crores. So what is the existing pipeline now looking like? And what is your outlook on both fresh slippages and slippages from restructured book going forward?
Our pipeline on restructuring is about 1,500 crores as of now. And overall, the outlook for our bank is that, the net additions to restructured and NPAs for FY16 should be lower than in FY15.
Okay. Hi ma'am, this is Amol here from Z Business. मैं जानना चाहूँगा कि कौन से सेक्टर से ज़्यादा फ्रेश स्लिपेजेस हुए हैं और बाय एनी चांस आपने एनपीएस आपके जो एसेट्स है वो आरसी को बेचे हैं एआरसीज को या बेचने के प्लान है आपके?
जो हमारे एडिशंस हैं एक्चुअली रिस्ट्रक्चर्ड में एडिशंस 1,200 करोड़ हैं और हालांकि जो एनपीए एडिशन है वो 3,200 करोड़ है, बट उसमें से 2,246 करोड़ एक्चुअली सिर्फ मूवमेंट है फ्रॉम रिस्ट्रक्चर टू एनपीए. तो जो न्यू एडिशन है एनपीए एसेट्स का वो अबाउट 1,000 करोड़ है. ये कोई स्पेसिफिक सेक्टर्स में नहीं है, ये एक्चुअली ज्यादा कंपनी स्पेसिफिक इश्यूज हैं और दे आर स्प्रेड अक्रॉस द डिफरेंट सेक्टर्स. इस क्वार्टर में हमने कोई भी सेल एनपीए का सेल एआरसीज को नहीं किया है.
मैम आपका नेट इंटरेस्ट मार्जिन स्लाइटली थोड़ा इंक्रीज हुआ है, आपका उस पर क्या आउटलुक है मार्जिन पर? और साथ ही मैं ये भी जानना चाहूंगा कि क्या इंश्योरेंस कंपनी से आपको डिविडेंड मिलना शुरू हुआ है?
जो net interest margin है हमारा for the fourth quarter was actually 3.57%, so that's a very healthy increase. और पूरा जो FY15 है उसमें net interest margin 3.48% था compared to 3.33 in FY14. Going forward, of course, net interest margins depend on how the base rates move and how the cost of deposits, etc. move. But मेरा ये मानना है कि going forward in FY16, we will be able to maintain the net interest margin of FY15.
I also asked about the...
Yes, of course, we are receiving dividends from both life insurance company as well as non-life insurance company. दोनों से हमें dividends मिलना शुरू हो चुके हैं.
Ma'am, Saloni here from Bloomberg TV. First question, in the last 4 to 5 quarters, you have maintained that you are calibrating your approach as far as the corporate book is concerned. Going forward, as you see demand for working capital loans and refinancing, will you be more open to now lending to the corporate sector, or going forward as well, at least for the next 2 to 3 quarters, there will be selective lending in that space?
You know, you've already seen that our growth rates on the corporate sector have improved slightly compared to the previous 3 quarters. The growth that we have seen has come mainly from some amount of working capital demand, some amount of refinancing opportunities for highly rated companies, and some demand from the public sector units. And I think this is the kind of gradual improvement that we would see on the corporate credit. So while yes, I think corporate credit demand would be better than the previous year, but I still think that even in FY16, the retail growth would be higher than the corporate credit.
Ma'am, as far as the 525 scheme is concerned, which is popularly called that, have you seen demand at that space? Have you restructured loans under that scheme? And I mean, any number that you can give?
I think that scheme is, a very good scheme because it enables that large, large projects which.
That was ICICI Bank, and Ekta is here. So listening in, any key takeaways, Ekta?
Yes, well, the slippages from the restructured book have risen quite considerably. So that's coming at 2,246 crores for this quarter, to compare it to the previous quarter to a 776 crores. So that is a big negative which is coming for ICICI Bank. But in terms of the fresh restructuring which they've done, it's been around 1,247 crores, which is versus the guided the guidance of around 2,300 crores. So that is a little bit of a positive for ICICI Bank. But they have mentioned the existing pipeline stands at around 1,500 crores. The other little bit of a positive is that they've not sold any fresh loans to asset reconstruction companies this time. If they had, then maybe the gross NPLs would have been worse than what they reported. But we must not take away from the fact that they have slipped in terms of their restructured loans by 2,246 crores as compared to 700 crores plus in the previous quarter. So that is the stress point for ICICI Bank. But in terms of their outlook, they have said that gross NPLs might be better than this year.
But quarter on quarter, this is a marginal improvement versus the last quarter, right?
In some parameters, not in terms of all parameters for asset quality.
I'm talking about only asset quality.
In some parameters, in terms of fresh restructuring, they've done better. In terms of maybe in terms of the gross slippages, I think it was over 3,000 crores, and the 2,246 crores which is slipped from the restructured book as compared to the 700 crores in the previous quarter is a negative. So it's definitely quite mixed in terms of asset quality.
All right, great. Thanks very much for that, Ekta.